Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson of Martinson Ag, and we're seeing some mixed trade in the grains and cattle futures this morning. Hogs a little bit higher. And Randy, let's talk about the grains first of all. Corn and wheat lower yesterday, maybe because of weather, but today we're trying to see wheat lead on those lower crop ratings, right?
I think so. I mean, I think that surprised everybody yesterday when the crop condition ratings came out. And we did see the winter wheat conditions drop by another 2% this week, down to 50% good to excellent. That was more than anticipated. But the bigger news was how the spring wheat conditions came in, below 50%. Some of the lowest we've seen in years on the first look at the crop, and almost over 20% lower than anticipated by the trade. So nobody was anticipating to see the spring wheat conditions come in that low.
Did it even surprise you, though? And why do you think those conditions were so bad? Was it just because it's been too cold?
Well, it did surprise me. I mean, driving around, I mean, we don't see a lot of spring wheat now in the southeast corner of North Dakota, kind of where we're located. But, it surprised me because the wheat got in early, it got growing. I mean, it didn't look that bad where we do have the fields in our region here. But I think once you get outside of that, you're right. I mean, the cold temperatures, the late plantings, I think all of that, and that, those 5 days of 90-degree heat and the wind, I think took a lot of life out of that wheat market. And then we cooled right back down again, which should have helped kind of heal it up a little bit. But I think it just did a little bit more damage, and the crop getting put in a little later is all adding to it.
Yeah. Does the lower winter wheat rating mean a whole lot, since the combines are going to start to roll here pretty soon and probably are in Texas already?
Texas, they're seeing some pretty good cutting. They're supposed to be test cutting in Oklahoma starting this week. So, yeah, the combines are going to start rolling further north. And I think it matters in some states, but, Texas and Oklahoma doesn't matter that much because it's going to get harvested here. And then we'll see what the real result is once the combine goes. When you start talking about Kansas and Nebraska there and Colorado, that's where it's going to be a little while before the combines roll. And it might be a little bit more significant there.
We also saw the first crop rating for corn, which was below expectations as well, right?
It was. And I think that, again, you look at the states that came in pretty poor. North Dakota was one of those that came in with some pretty low ratings, and rightfully so, with as cold as it's been, the poor emergence. The heat that we had didn't really help us that much, because then we got heavy rains and cold temperatures again. So the crop's got a ways to go. And I think this just reminds the market and the traders that, you do still need to have a little weather premium in this market, even though things were expected to be a lot better than what they turned out.
Yeah. Corn planting nationally at 87%, but we do have a lot of the states in the eastern and southeastern corn belt that are starting to lag, especially places like Ohio, right?
Ohio's lagging. Illinois is even lagging. Kentucky. So yeah, that the eastern corn belt really is actually seeing some pretty slow progress at this point. And there is some talk of possibility of seeing some prevent plant, especially in the more southern regions of those like Kentucky and Pennsylvania. So yeah, it's going to be a while before this corn crop is done. I know that it'll probably push, especially in Ohio, into mid-June, but that's going to keep, it's going to keep some attention to that crop.
Yeah, because we're getting into final planting dates in a lot of areas, aren't we?
We are. When you look at most of, western South Dakota, western North Dakota, northern Minnesota, plant date's already passed. That was May 25th. The next date for, the southeast corner of the state and southern Minnesota is going to be May 31st. That comes into play on Saturday. So yeah, right now it looks like we are not going to be able to have enough time to get all of the corn planted up in the northern plains, let alone the western corn belt.
Yeah. What about like Ohio, though? Isn't their plant date a little bit later?
Most of then the central and eastern corn belt goes until June 5th, I believe. So they get a little more time, and Ohio likely will push it, like I said, till the middle of June to plant corn. But every time, every little bit later that you plant, the lower potential the yield is going to be.
Why does the market act like it really doesn't care about this, though, Randy? I mean, new crop corn was down yesterday, and we kind of knew that there was already some planting delays, and we're struggling this morning.
I think part of it is one, they'll believe it when they see it. I mean, we can plant a lot of the crop in a little bit of time, so I think that takes some of that premium out of it. And then we really didn't have much premium in the grains until we started to develop a little bit weather concerns. The other part is that I think the trade is looking at USDA as really heavily banked into demand, and they think some of that demand could be overstated in the supply and demand numbers, and there's some wiggle room in those. And I think that also is kind of lessening the concern about production.
Yeah, and the funds have just continued to push shorter in the corn market, haven't they?
They have, and right now, you look at it where the crop rating is as low as we are right now, and the trouble that we're having, you kind of have to ask the question is it possible to get that good of a corn yield? Well, it's kind of early in the season to see much adjustments on that, but I think that's going to be the debate now going forward for the next couple of USDA reports.
Gotcha. So soybeans managed a slightly higher close yesterday, but are down pretty hard today. Is that because the idea now is that maybe we'll see a few more acres of soybeans planted, or what's weighing on that market?
I think that's exactly what's weighing on the market is that, we're seeing a little slower progress, a little poorer conditions. We could start to see some crops, getting switched out of, corn and into some later season ones. I do think soybeans are under pressure because they're expecting to see more acreage.
Yeah, that market, though, is held together quite well, despite all of the rumors that we've had about biofuels policy maybe not being quite as favorable as we thought.
True, and then I know that EPA keeps throwing out and saying that, this is going to be the minimum standards that we're going to put out. They can still do more. Well, it's going to be interesting to see where that falls. And that's going to be a big part of how I think the soybean market and, the vegetable oil market does moving forward, because that's going to be, I think, the bigger demand source than exports at this point.
Yeah, and speaking of exports, let's talk a little bit about trade. We have not seen major developments on a lot of these trade deals, a lot of talk that a lot of them are coming. And so the market has just been kind of acting laissez-faire about it, hasn't it?
It has, and the saying is the bull needs to be fed every day, and we need to keep getting some information on these trade deals. And right now, we've got a pretty strong demand base built for the new crop in the supply and demand number. So we need to get some of these trade deals wrapped up and finalized. And the longer it takes, the less confidence the market's going to have.
Well, the EU trade and tariff delay yesterday didn't really help move at least the corn and wheat market at all, did it?
No, it didn't. And I wouldn't expect that we're going to see a lot of demand on the wheat or the corn market there. I mean, I think some of the other specialty crops might see a little bit more, attention to the EU trade deal. They produce a lot of wheat in that region, so I just don't think wheat's going to be part of the equation, or, corn might be some. Soybeans, I think, have a better chance, but then we still have to get over the GMO issue.
And the market at least needs to see some sales, doesn't it, before it really buys into a lot of this?
Well, that's the other part, is that sales have kind of dried up. Yeah, you're right. I mean, we need to see some demand to continue to come in to see the push. And right now, we're getting almost ready to wrap up the old crop. Well, wheat is about ready to wrap up its old crop. We did see some good sales in the last one, but we really have very little new crop corn and soybean sales on the book. So we got to start picking up and getting some movement on that.
Gotcha. Cattle market has been kind of back and forth here this morning, is trying to recover after the wild ride yesterday on that false rumor or false news about New World screwworm in the U.S. And so can we recover, do you think?
It's going to be tough. I mean, right now we've had, 2 times in the technicals where we've seen some pretty negative formations on the charts. A couple of weeks ago we saw it. We saw it again yesterday. And to me, it looks like, the fundamentals are trying to battle against the technicals. And if the funds want to start turning this market, they can make that technicals look pretty ugly pretty quick. And I'm worried that we could start to see this thing tip over. I think what's going to help it the most is we have to find out just how strong the Memorial Day weekend demand was for beef demand. I think that's going to help carry us.
But cash trade, if we're higher again and you've got the futures continuing to drift, making an even bigger discount to the cash trade, how long can you do that?
You can't. Cash is king in any market, and that's usually what leads us. And if cash continues to be strong, and that's going to be the fundamental side, is that supplies are going to be tight. They're going to continue to be tight, unless we open the border to Mexico, which I don't see that happening soon. So I think we're going to continue to have that little bit of a struggle between the two. Doesn't mean that we can't see a sell-off and see a recovery, but cash will have to start to weaken to kind of put the final nail in the coffin, you might say.
Yeah, and the rumor that we saw yesterday about screwworm probably is something that we should be cognizant of, that we might see the algorithms kind of take hold of some of these headlines, and that sometimes can push a market farther faster than you think, right?
Oh, most definitely. Once you start seeing the algorithms hit, then it starts the computer generated sales, sell stops get triggered, week long start bailing out. Then it starts feeding on itself. And then, that would be the worst case scenario that could happen at this point.
That's why we maybe shouldn't go along with the CFTC's 24/7 trading platform proposal, right?
I don't see, we don't sleep enough now. So yeah, I'm really not one in favor of doing 24/7. I think that would really impact the cash market, on a negative standpoint, just because then you're never really knowing where your cash market's going to be set, because it's going to be changing constantly.
Yeah, and the increased volatility is not good either, is it?
It's not, because once you get, if you get a little bit of thinner trading and you get some big orders in there, you're going to see some pretty strong or pretty wide trading ranges. And that in itself can kind of mess up a market when it shouldn't be.
Yeah, and then you get people in there moving the market when they shouldn't either. All right, thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.